You've likely seen it in the headlines, a shocking and tragic event for some, and a joyful for others. The CEO of UnitedHealthcare, UNH, Brian Thompson, was killed in a meticulously planned attack on a New York City sidewalk. Just as he was about to enter the venue, a masked assailant shot him in the back. As CEO, Thompson led a company with a massive footprint, providing health coverage to over 49 million Americans, privately managed alternatives to the government's, but also a major player in individual insurance and employer-sponsored coverage, as well as state and federally funded Medicaid programs. Here on this channel, we analyze companies using a value investing methodology, seeking long-term opportunities in businesses with strong fundamentals. We rank companies on a top 100 list based on their performance and potential. With this tragic news, UnitedHealthcare's stock price has dropped, presenting a possible opportunity for value investors. Despite the turbulence, this is a robust company with a significant moat. Let's dive in and evaluate if this drop signals a buying opportunity for long-term investors. Let's start with compound annual growth rate, which shows how much an investment grows each year at a steady rate, making it easier to understand returns even if performance fluctuates. For key metrics like net income, earnings per share, sales, cash flow, and book value per share, we look for steady growth and consistency, targeting over 15% compounding growth over 3, 5, 7, and 10 years. In the case of UnitedHealth Group, the company has consistently achieved a growth rate of over 15% across most metrics, which is a positive sign. When we look at the growth graphs for each metric, we observe steady progress. For this reason, we assign UnitedHealth a score of 18 points for net income and EPS, 15.5 points for sales, 17.5 for operating activities, and 14 points for book value per share. The next metric we'll examine is return on investment, or ROIC. It evaluates how effectively a company uses its capital to generate profits. Think of it as a report card for how well a business is converting its investments into value. It reveals whether the business is earning more money than it costs to operate. With this metric, we aim for year-over-year growth rates above 10%, that in the case of UnitedHealth Group, UNH, most percentage rates exceed 20% over a 10-year period, reflecting strong capital allocation. The only concern, as seen in the graph, is a period of stagnant and static growth. Taking everything into account, UnitedHealth receives a ROIC score of 36 and an ROE score of 29. The compounding growth of total stockholders' equity over a 10-year period is a key indicator when evaluating financial performance, health, and potential as an investment. Ideally, we're looking for a company that consistently generates profits and retains a portion of those earnings to reinvest in the business, rather than distributing them entirely as dividends. Growth in equity often signals that the company is reinvesting wisely to grow its long-term potential. For this metric, we aim for a 10-year growth rate exceeding 15%. However, UnitedHealth Group, UNH, scored only 10 points for this criterion, despite showing a consistent equity growth trend. While equity growth is often seen as a positive signal, it's essential to dig deeper and analyze the drivers behind it. One of the most important drivers is free cash flow. It reflects how much cash a company generates after covering operating expenses and capital investments. A growing free cash flow is a story of operational efficiency, sustainable growth, and shareholder value creation. In the case of this company, the graph clearly shows steady free cash flow growth over time, reinforcing its strong financial position. For this reason, we're giving it a full 20 points for this criterion. Now let's move on to the next criteria, the Quantemental Rating. This combines 5 key factors to rate a company: valuation, growth, quality, momentum, and income. Each factor focuses on specific financial aspects. Valuation assesses how attractively priced the stock is. Growth examines the company's future potential. Quality evaluates the efficiency of its operations. Momentum considers recent stock price trends. And income focuses on dividend payouts. The Quantemental Rating is a comparative metric, meaning we analyze how the company performs relative to others in the same industry. It's already calculated for each company, and from this value, we generate a final score for the QR rating. Because this rating is weak for this company, it only receives 19 points. And finally, we wrap up the rating with another comparative criterion, the PE ratio, or price to earnings. This metric is often a starting point for value investors when making a relative valuation. However, it's not just about the ratio itself. Factors like the company's industry and growth rate also play a critical role in the analysis. Ideally, we're looking for a company with a low PE ratio but high growth compared to its peers. To achieve this, we add potential competitors into the mix, rank them, and from there, generate the score for our company under review. For this criterion, UNH only received 10 points. And now that we've covered all the criteria in the fundamental analysis, it's time to see how the company ranks in our first rule value ranking system. UnitedHealth Group scored a total of 232 points, with a weighted total of 1,098 points. This puts the company in the 65th position on our 100-plus ranking list. While there are stronger businesses on the list, it's important to seriously consider UnitedHealth's competitive advantage and strong moat when evaluating its overall potential. UnitedHealth Group is among the largest health insurers in the United States, providing health coverage to over 49 million Americans, a number larger than Spain's entire population. Its massive size grants it substantial negotiating leverage with healthcare providers, pharmaceutical companies, and other stakeholders. This economics of scale-based advantage helps lower medical costs, making it more competitive on pricing and ultimately more attractive to customers and employers. Over the years, UNH has built a broad and deep network of hospitals, physicians, and specialists. If competitors try to match, UnitedHealth Group face significant challenges. Its sophisticated analytics system, which results in more efficient operations and more competitive pricing, provides the company with insights that newer or smaller competitors cannot copy. One of UnitedHealth Group's most notable differentiators is its Optum segment, a diversified health services that includes pharmacy benefits, data analytics, care delivery, and technology-driven health solutions. Optum not only drives additional profit streams besides a traditional insurance, but also allows for more efficient care. The health insurance industry in the U.S. is subject to complex regulatory environments that vary from state to state. They are overseen by both federal and state entities. UnitedHealth Group's strong foothold and solid compliance systems make it tough for newcomers to break in, thanks to the complex regulations and massive resources needed to compete. When it comes to healthcare, brand, trust, and familiarity are extremely important for customers. Individuals and employers choosing insurance providers often lean towards those with long-standing market presence. UnitedHealth Group's long track record and financial stability make it a default go-to option for many large employers and health plan brokers, which can be a powerful competitive edge. That said, even a company as solid as UnitedHealth Group isn't immune to challenges. After a suspect was apprehended, the stock price continues to drop, raising an important question: at what price should we buy? To find the answer, we'll calculate the intrinsic value and pinpoint the optimal buying price. For this, we use the equity valuation model that helps us to calculate UNH discounted cash flow intrinsic value. According to our calculations, UnitedHealth Group's intrinsic value is $584.46. It means that our company is barely undervalued right now, but to get a good price, the entry point could be at the support level of $460.54. If you enjoyed this analysis, please like and subscribe. It really motivates me and supports the channel. Thanks for watching, and I'll see you in the next one.